Alright, what's good with y'all boys, man? I'm gonna tell y'all how I took a loss today and went break even. As you can see, I lost one, actually lost. I put my nuts on the table, I'm not gonna lie, with this first one. Probably shouldn't have did it, looking back, hindsight 2020, but did what I did, ended up longing twice after that and going break even on the day. Um, so I'll just start from the top and just do like a weekly analysis because I'm looking at this now. I'm like, damn, like one, I probably shouldn't have took this, and two, like let's say you did take a trade and you're actually profitable through this week. I respect you. I respect myself. I'm up on the week. But anyway, let me stop talking about myself. All right. So as you can see, right, we just came out of this downtrend. Cool. Monday was a pretty good day as far as going long. Cool. Boom. Up. Bus work. All right. So Tuesday through Wednesday is where it got tricky. Right. So we can see Chop City, Chop City. We get NVIDIA earnings after close. So you can't trade the market. So we're just chop, chop, bus, chop, chop, chop. All right. So these are low-key not ideal conditions. And if you scale down, you can just see like, bro, this is like a QR scan code, dude. Dude, this is crazy. This is crazy work. All right, so I'm looking back. I'm like, damn, like, probably it's good. Like, no money lost is better than money lost at the end of the day. All right, and I always have to remind myself of that. But at the end of the day, though, you know what I'm saying? I didn't even say nothing. Okay, so let's get into why it's actually like what is going on right now. All right, so there's actually two things which is making the market kind of just fluctuate within this range of like unknown, because right now we're in no man's land. Like, honestly, we can go either way from here. Right here we can either just I mean, obviously the stock market could go two ways, up or down, but let me just tell you why. Alright, so this guy right here, you want to pay attention to this guy. You want to get to know this guy. This is Kevin Warsh. He is the chairman of the Federal Reserve, aka the man in charge of the United States money supply. So this man is in charge of whether your credit card interest, your home loan interest, your whatever things that you borrow money for, this man is in charge of how expensive or how cheap it's going to be, right? So he's in charge of setting the base interest rate for money around the world. Okay, capiche, capiche. Okay, so let me give you guys an analogy. Let's say the base rate for interest rates is 0%. The bank is likely going to charge you 2 points on top of that. So let's say you take out 100,000 for the bank, right? They're going to charge you, let's say, 2% if the Federal Reserve rate is 0. With a 2% rate that you have to pay back, you can literally put your money in anything and get 8% returns back, right? Like, let's say you put your money in S&P, you get a 10% return there year over year. Boom, you pocket 8%, pay the bank back 2. That's free eats, right? Compared to, let's say, interest rates are at 6%, right? The baseline that the Fed, makes interest rates is 6%. Bank charges you 2.5 on top, so you got to pay back 8% now. Now, if you put your money, let's say in the S&P 500, and you only average 10% year over year, and that's on average, so it may decline, it may be more than that. It's a risk. There's more risk involved when interest rates is higher, right? When the cost of borrowing money is riskier, you're more likely to have more cash on hand just in case anything goes wrong. So you can see the last time we raised interest rates, damn, we're only back in 2000. The last time we raised interest rates was that was before 2022. Okay. Right after COVID, or not right, 2 years after COVID, March 17th, 2022. All right. So you can see going into 2022, we're already in a declining market, right? So boom, move up, move down, move up, move down. Now it's March. And once they announced that, they just literally finished it off. All right, so we can see by the time they announced interest rates, that's a 30%, 29% decline just off them raising the cost of money, right? Because what do you do when money gets more expensive to pay back? You have to get a little bit more liquid. You might have to rob Peter, pay Paul, pull some money out here, pull some money out there. So the stock market declines. Real estate declines. Any risk on asset declines in environments where interest rates are high, right? And it does the opposite when interest rates are low. So let's see. What was the Fed rate in 2020? 0. So you can see what happens when they decreased it to 0. When exactly? March 15th, 2020. Emergency slash to 0%. So March 2020, you already know what happened. You already know. So, boom. March 16th, we low-key hit the bottom, right? So from here to all the way until, right, the next time they made a policy change is bro, you cannot make the stock market doesn't move off whether the average American is doing good or bad. Unfortunately, it revolves around how cheap or how expensive money is. So when you have interest rates at 0%, right? Imagine getting a loan, $100,000 loan, and your interest rate is 0%. You're just paying back 100,000. That's free eat. You put your money in a high yield saving, that's 4%. Put your money in the S&P, average 10%. You put your money in this, holy buswork, like you put your money in anything with a 0% interest rate, dog, it's like the dream. Like I should have been locked in. I was playing football, so I was like not in the know. But now that I know, now I'm prepared. And that knowledge is power, bro. Once you realize how this stuff moves, bro, lock it in. Once you know, you can't unknow, and it's up to you to act, right? So boom, we can see cheap money equals more risk to put in markets. Expensive money means, all right, time to be cautious, time to liquidate. And this is where we're at right now. All right. That whole thing was a spiel for what's happening now. Right. So right now we're in that in between phase where we don't know if we're gonna raise interest rates or keep them still. Now we're not. It's pretty much a consensus that we're not gonna cut it, but there's that fear of, okay, if they make money more expensive to borrow, and this is all the economy is about. It's just about putting money here, putting money there. I ain't gonna lie, that's what it's all about. So you make it more expensive to do that when our GDP is not the best with maximum employment. Now we have a problem. Now we have, all right, this is not like this is not chill, right? Because if we have 4.1% unemployment right now, so ideally we should have like 3%, something crazy. We should have like a really good GDP right now, but I think it was about 1.5%. Hold on, let me see. What was GDP growth last quarter? Yeah, bro, 1.5%, dog. That's like, just know that's not good, right? Typically, we aim for two. Two is on the lower end. 3% is the standard of what we want to see in GDP growth, right? So we're doing worse than inflation right now. Inflation's at like 3%, 3 point something percent. Right, so you can see we have a discrepancy. So if they raise interest rates on top of us not already in the best spot, now you see how we have a problem. Now you see why, like, all right, we're indecisive. Okay, we have NVIDIA earnings; they did really good, but now we're just indecisive. So this is what's in my head the entire time. So going into the day, you guys actually just got a really good lessons about interest rates. All right, so just going into the day, I'm like, all right, ideally, I want us to come down to 713, take out these equal highs along with these relatively equal lows. They're not that equal, but these lows at 713 along with these highs. Cool, right? So I'm like, bet. We're already making a downtrend going through London session. I marked up this draw here, not this one because they're relatively equal, and the ultimate London high here. So going into the day, I'm like, bet, like let's get this work. Hey, my phone blowing up. All right. So just looking at the 5 minute, you can see why I'm like, bruh, like I should not have done anything today actually, which kind of forced me to go down a little bit more to the 1 minute because I can't see anything there. Right. So I'm going here. I'm like, all right, I can see things a little bit more clearly. We come up. Oh, let's zoom out a little bit. All right, we come up. We take out the opening high. Right. Cool. So I'm like, all right, bet. Let's see what we do here. Obviously, I'm expecting a retrace since we just took out this relatively major draw in liquidity, right? So we get that immediate sharp move down. So I'm like, all right, cool. Like I can be bearish here, right? Because on the 1 hour, we're already on the 1 hour we inverse this gap here, this gap here. Here, let's mark it out so you can see it. So I'm like, oh, like this is chill. This is la peace. Like, this is chill, right? So I'm like, cool. That's a bet, right? So going down to the 1 minute, cool, chill. The only thing that was concerning me was the fact that we were within this 15-minute gap, and the first time we came down here, we reacted, and then we reacted again. And I actually should have took this into account, and I didn't. I marked it afterwards, and hindsight is really 2020. But like, I should have seen this and been like, all right, bro, like you're low key freaking tweaking right now. Like, ideally, this if this closure right, if this closure happened at 7 a.m. this would have been chill. This would have actually been chill for me to take shorts. But I was like, all right, we came back up. Boom. As long as we respected this 1 minute gap, I was down to stay bearish, which it did. Fully respected it. We came down. All right, boom. Inversed this bullish fair value gap here, right? And we end up closing under the body of this wick. So now I'm like, all right, we end up creating this breaker. I enter here off the body of the low. I'm like, bet, like, should be chill. No, it was not chill. And I actually risked a good amount on this too. Like, I I put my money where my mouth was. And unfortunately, I did take an L, right? So that was not chill. And looking back, I'm like, damn, that was very unavoidable. So I ended up going long. I ended up going long after losing $500. So I'm like, damn, like I knew it was bullish, but my dumbass, which is what I'm calling myself a dumbass because I tell people like, bro, do not short a downtrend when, because I'm not saying like don't do it at all, but like be super cautious. If we're just in an overall uptrend and you're trying to short the downtrend, bro, like you got to be in and out. And if you see it not going the way it's supposed to, like if it's not chill, like it's not chill. Get out. So I got out. My thing was just I just risked a little bit more, which I'm okay with losing $500 on the day. Like that was chill. It was more the fact that I knew I didn't follow my rules and I went against my original bias of which was just overall bullishness. Okay, so boom, I'm like chill. We inverse this gap. Now I'm officially bullish, right? So we inverse this gap. Let's see what this looks like in the 5 minute. Because I was after that I was on the 1 minute the entire time. I'm not gonna hold you. Alright. So yeah. Let's see. 710. We actually broke 5 minute structure. Along with us respecting this 15-minute gap. By this time, I'm like, all right, bet we're respecting this gap. We're moving up. I'll be dumb to be bearish. Like I would low-key be dumb not to even take longs here. So that's also why I took longs. I swear I wasn't revenge trading. Like you might be like, bro, you're a revenge trader. Like nah, bro. Like chill out. So I end up entering here, right off the break. So I'm like, all right, as long as we don't come below this wick, this is La Peace. This is chill, right? And then right, we ended up getting this move up, which was also the 5-minute break in structure. So I entered again here. So I double dipped. I'm not gonna lie. But this, I didn't risk as much as my loss because I'm like, that's one thing that actually made me profitable. Just not fucking risking more on another trade. Like after I take a loss, I'm definitely not gonna risk the same amount as like I did the previous trade because now you're like double fucked. Right? You don't want that to happen. So boom, we take out intraday highs again. That's TP1. Boom, cool, chill. We ended up coming down some more, and I'm like, hey, like, chill out, bruh. But I was convicted. Like, there's honestly, if we came down after this, that would have just I would have took that to the face. I would have took that to the face and chalked it up with God. Like this is a good play. Right? So boom, we take out these not intraday, but these internal draws on liquidity. Boom, here. And then ultimately we come up and take out these London highs again. So by this time, I'd actually hopped off the charts. So I'm like, bro, I'm not gonna sit on the charts for 3 whole hours. So got off, came back. I'm like, damn, like this actually looks good. Like if you zoom out, you're like, damn, like actually, you're not tripping, Daryl. This actually does look pretty good. All right, we get a 5-minute break of structure after tapping into this just amazing gap, right? So I'm like, bet London highs are still untouched. You're about to get touched respectfully, and end up risking not too much, right? That's why I went break even on the day. I just didn't. I did not want to lose money today after knowing like first off that was very unavoidable, like, and then after being in drawdown after taking partials here, I'm like, yeah, I don't have the stomach for that. So went light risk on both of these, ended up risking the same amount as I did here ultimately, and that's how I went break even today. Now, going into tomorrow for Friday, kind of don't want to take a trade just because he's going to be talking, and whether or not he says he raises interest rates is going to determine where the market goes. Like, actually, he's the market maker tomorrow, and he's talking at 7 a.m. while the market's open. So, I'm not taking a trade until after 7 a.m., if that. But ideally, I'm not looking to trade tomorrow in this market. Okay? So, pretty good video. You guys got an overall education on interest rates, my bias, trades I took today, and overall sentiment. So right now we're just gonna play ball, bro. We're just gonna play the ball where it lies and see where we go from here as far as tomorrow. So with that being said, I think that's pretty much it. See y'all later, man.